It seems like with everything going on in today's world, people are really looking for a second source of income, something to supplement their current income, or just have additional cash coming into them. And a lot of people, for those reasons, are looking at dividend stocks. Now, before you jump into in dividend stocks, I feel there's a few important things you should know about first. Hey everyone, thanks for joining me today. My name's Matt, and what I want to talk to you today about is dividend stocks, or talk to you about you, never mind, is dividend stocks. Now, dividend stocks could be a great way to supplement your income, again, create additional flows of income, but there's a few things that are worth mentioning when it comes to understanding dividend stocks. So what I want to talk to you today about are the different calculations to help you determine if something is a good investment, as well as where you can find dividend stocks. Now, before we jump into that, you might see that my background here is starting to look a little bit different. Hopefully the audio from my microphone is actually going to come through okay. This is more editing than I could probably handle, but I'm learning with it and really just want to make sure that I'm providing all of you some quality information. So without any further ado, let's go ahead and jump right into this. And the first thing that we'll talk about is ratios. So there's two ratios that are very important for starting off with dividend investments, and those are both your dividend yield and your payout ratio. So the first one that we'll talk about is going to be the dividend yield. Now, the dividend yield is simply the percentage of an amount paid out relative to the current share price. Better put, it's how much you would receive in annual dividends compared to whatever that stock price is trading at. And it's a really simple thing to calculate. All you would need to do to calculate this ratio is you would take the annual dividend paid and divide that by the current share price. So I'll walk through an example here with you so we can kind of see this together and see how it's calculated. And the company that I'm going to be using as an example today is Walmart. So Walmart right now is trading at $123.90. It's worth noting as we go through this that the ratio is always going to change because the share price is always changing. So looking at it, and if you're concerned like down to the penny, don't worry about it like that. Just kind of give yourself a range, or sometimes it helps for you to, maybe as you're doing the math, give it different share prices so you can see what that yield is. But just simply put here, what we'll do to calculate this is we'll go to historical data. Right here where it says historical prices, you'll switch that to dividends only and hit apply. Once that comes up, you'll just click over here and hit download data. And that will open up either Excel or numbers depending on what you have. And let's make this full screen. Alright, so here is our total dividend. So what we'll do is just add another table, and it doesn't even need to be that big. So what we'll do is we'll do total annual, if I can type, dividends. I use a lot of abbreviations when I do these, so sorry if that gets you lost. Definitely let me know what questions you have or if any of my abbreviations don't make sense as we go through this. But we have here is our past 4 months dividends that were past 4 dividends that were paid out. These are paid quarterly, so I just did dividends year to date, and it showed me these for the past 4. So we'll just take the sum of these. Oops. And we'll see that they paid out in total $2.13 in dividends per share during this time frame. So just to keep it simple here and without me needing to flip back and forth, we saw that the current market value of Walmart, as you saw on my screen earlier, was around $124. Again, it's going to change. It's going to change at all times. So we'll just keep it simple here and leave it at $124. So as you see, total dividends $2.13. Current market value is $124. I am a little did not mean to do that. I'm a little bit of a nerd when it comes to this stuff, and I always like for it to look nice. I don't know why. I'm not an organized person, but when it comes to spreadsheets, I always have to have them organized. So all we'll simply do to get your dividend yield here is we'll take this top number, which again is your total annual dividends, and simply divide that by the current share price. and we get this crazy looking number. Just to make our lives a little bit easier, we'll want to see that as in a percentage, and we'll see that Walmart's dividend yield is about 1.71% or 1.72%, depending on how you round it. So that's how you calculate the dividend yield. And again, that's just going to show you basically how much they're paying out relative to the stock price. So pretty simple, but is an important statistic to look at. And I'm aware that 1.7 to 1.71% does not seem like that high of a stock or of a dividend yield, but we'll go into more detail about that later. So the next ratio we'll talk about is the payout ratio, the dividend payout ratio. Ultimately, this is the one that I pay more attention to. I do look at the dividend yield when I'm looking at stocks, but I feel that the payout ratio just signals more information or has a better indication for me as to what to expect with the money or kind of what this payout actually means. Now, there's multiple ways also for you to calculate this. I'll just do it with the simplest part. This isn't a test in your finance class where you have to calculate earnings per share or anything like that. We'll just keep it really simple and assuming that you could find EPS pretty quickly and easily. So the payout ratio is the total dividends paid relative to the company's NOI, or net operating income. So it's how much they paid out to shareholders compared to how much they made, or to how much they made in net operating income, not gross profit. We don't need to worry about that right now. We're just going to talk about the ratios. If you have any questions on that, I'll gladly make a follow-up video to this going into more detail about the difference between like net operating income, gross profits, all that good stuff. But for today, let's just stick to the basics. So we have our annual dividends per share, and we're going to divide that by our earnings per share. So going back to Walmart, we have our Walmart right here. And let's go back to the summary. And as you could see, they do have the earnings per share listed already for us. So it's not something we're going to have to calculate for this example. TTM stands for trailing 12 months. Don't worry about that either. So we have the 5.19. Oops, wrong way. All right. So coming back to the same example, we already have this here. So let's go div yield so everything stays labeled. And then what we'll do is earnings per share was 5.19, which would mean that our payout ratio, again, pretty simple. And I always like doing it this way. Sorry, I keep flipping back and forth, but I always like doing it this way because you'll notice that the total annual dividends, at least for the examples today, is always the top number, or I guess the numerator, if you really wanted to be specific. So just as I go through it, it always makes it easier so I don't confuse what needs to be on top, what needs to be on bottom. Yes, this is stuff that I've done for very long, but there's so many different ratios and calculations that sometimes you just need to make it easier on yourself, or sometimes you do need to look it up. And hey, no shame in that because it's a lot. And when you have the computer right at your fingertips, why not take advantage of it? So back to the point. We have our payout ratio, which we're simply going to calculate by dividing total annual dividends paid divided by the earnings per share. And this one should not be a dollar sign. That's where it gets a little funky, but so actually, and since this is a ratio, this should be a percentage. Anything that says yield, ratio, anything like that should always be a percentage. So we'll see 41% basically for their payout ratio. Now, what does that 41% mean? Again, what that means is their net operating income. Of their total net operating income, they paid out 41% of that in dividends. So they paid out 41% of that NOI back to their shareholders. So that's the simple way that it's calculated. But that's why I like that number more than the dividend yield, because it really goes to show how the company's using their money. So I know right now I'm just kind of spitting out numbers. This might not make sense to you. So now that you know how to do the calculations, let's just kind of go over what all of this means and how you can use this information to your advantage. Now, it's important to keep in mind as you're running these numbers that higher does not always mean better. And you got to be careful when you look at these numbers. So Commonly, if a company cuts their dividend, the share price will decrease. And actually, it happens in the reverse typically. A lot of times, what we'll see is that the share price decrease before dividend gets cut, which, if you're running the numbers, as you know from our example earlier, if Walmart went from the 124 share down to $80 a share, you would see a higher yield because it's relative to how much being paid out. But that's not necessarily a good indication because that dramatic decrease in the share price could indicate that there's issues going on with the company. So always just be careful when you see, these yields of 25, 30%. Maybe take a deeper look into the company's financial statements or their cash flows, their balance sheets, or listen to their earnings calls and maybe see if there's a reason why that yield is so high, or also look at the share price even and just see if there was something that caused a dramatic decrease. And a high payout ratio could signal that a company is paying out more than they can afford, which is not a good thing. So what that basically means is if a company is paying out a lot of money, that might mean that they're not doing as much acquisitions as they should be, they're not growing their business as they should be, or they're not looking to get into new areas to become more profitable than what they should be. So if a company is paying out an excessive amount or has a high payout ratio, that might mean that they're not putting their money in the right place. Now, what does all this mean? What's a high ratio? What's a low ratio? Let's go over that. So for dividend yield, it varies by sector. You'll see higher payouts in a utility company, for example, than you would see in maybe like a electronic company. That might not be correct, but just for sake of example, so it will vary by sector. But generally, you should look for a range of about 2% to 5%. From our example earlier, Walmart came in at about 1.72%. which to me is close enough to 2%. Walmart's a great company, so it's not something I would just completely dismiss because the ratio is below 2% or because the yield is below 2%. As for the dividend payout ratio, generally between 35 to 55% is what we should look for. Again, as we saw, Walmart is dead smack in the middle of that. So they're in a pretty good spot when it comes to dividend payout ratio. Yes, their yield might be lower than what I listed there, but again, to me, that payout ratio is more important because it shows that Walmart is paying their investors while also looking for new opportunities or ways that they can still continue to grow their business, as big as Walmart is already. Sorry, got a phone call. So where would you look for dividend companies? Well, generally, dividend aristocrats are going to be a great place for you to start. Now, Dividend Aristocrat is a company that has increased their dividend payout every year consecutively for 25 years. It's something that a lot of companies actually strive for because having that title of a Dividend Aristocrat really just shows a lot about the company. It shows that they have done well with growth. 25 years, you've probably experienced more than one volatile market, so you handled that well. You're growing well as a company. And ultimately, it's something that investors like to see because that's what they can see to say, hey, they've paid out. Not only have they paid a dividend for 25 years, they've been able to increase that payout each year for 25 years. So that's something that investors like to see because, again, they're paying back to the investor while also putting money in the right places to continue to grow. Utility companies. So utility companies are also my favorite place to look for dividends. Generally because they aren't growing as much. Everybody has utilities. Every business has to have utilities. So they're going to be a place that's going to be pretty consistent regardless what the market's doing. If there's a recession, a depression, pandemic, anything going on, there's a good reason that utility companies stay around. And it's, we all need heat, water, and gas at the end of the day, electricity, all that good stuff. So utility companies are another great place to look for that. Now, those aren't the only two places you can look, but if you are getting into investing for dividend companies, that is the two places that I personally would start. But feel free to do your own research and maybe you'll find something that's a better fit for you. So I hope that video was helpful for you today. I hope that you got to see, or the spreadsheets made sense. I hope that you like this new setup. I'm definitely going to make a video talking about this setup soon. Quick story, my girlfriend's company actually was able to print this out for me. Her mom owns a printing business, and it looks fantastic. It's just like a vinyl sheet, and it just looks really good. Their name is iTech Graphics. I didn't sponsor this or anything. Just kind of got lucky that my girlfriend is so willing to help me and so supportive. So if you need something printed for like a commercial business, definitely check out iTech Graphics. But for the time being, as I always like to say, you could be anywhere in the world, but you're choosing here to be with me. So I really appreciate that. Thank you so much for your time today. If you have any questions, please let me know in the comment section down below. If you did find this helpful and think you'd want to hit the like button, that would be super cool of you. And if you wanted to subscribe for more updates, again, feel free to do so, but I'm not here to tell you what to do. As always, stay healthy, wash your hands, and I hope you have a great rest of your day.